Top executives of the big three automakers in the United States tried to convince a group of senators Tuesday that the global financial crisis is contributing to their problems. But Senate Banking Committee Chairman Christopher Dodd told them they could not say they did not see this coming because their companies have been struggling for years. Dodd said the automakers have failed to adapt to change, and now everyone is paying the price.
They've been content, in my view, to not only satisfy, but in too many respects drive the demand for inefficient gas-powered vehicles that Americans have been going broke to gas up. They derided hybrid vehicles as making, quote, no economic sense, unquote. They have dismissed the threat of global warming, the role played by their products in creating it, and the strong desire for the American people to do something to stop it.
Congressional Democrats want to use the money from the recently approved $700 billion economic stimulus plan to give loans to the car makers. But Senate Republicans and the Bush administration are opposed. They say the automakers should use a previously approved $25 billion loan from the Energy Department that was meant to help them build more fuel-efficient vehicles. The three executives say if one of the automakers goes out of business, it will affect them all and will damage the U.S. economy. The CEO of General Motors, Richard Wagoner, said the failure of the auto industry would be catastrophic, resulting in the loss of millions of jobs.
I do not agree with those who say we are not doing enough to position GM for success. What exposes us to failure now is not our product lineup, is not our business plan, is not our employees and their willingness to work hard, is not our long-term strategy. What exposes us to failure now is the global financial crisis.
But Republican critics say the financial crisis is not the only reason the auto companies are in trouble. They say production is not efficient and labor costs are higher than those of many foreign car companies. Ford Motor Chairman Alan Mulally says the company has been restructured to generate more income.
We have reduced production, we have further reduced employment, we have eliminated all raises and all bonuses through 2009. We took these measures while protecting the heart of our company, the new vehicles that will secure our future.
Chrysler sales were down 25% through the first 9 months of this year, the worst decline of any major automaker. The head of Chrysler, Robert Nardelli, says that without federal help, the automaker will not have enough money to stay in business.
We just can't be confident that we'll be able to successfully emerge from bankruptcy. That's why in industry, collectively, we're requesting $25 billion of working capital to survive this liquidity crisis.
The new rescue plan appears to be stalled on Capitol Hill. During a separate hearing earlier in the day, U.S. Treasury Secretary Henry Paulson opposed the Democrats' plan to use an additional $25 billion from the rescue package. Deborah Block, VOA News, Washington.